Hey, good afternoon, everybody, and hey, thank you guys all so much for joining us today. Today, we're going to be discussing how health insurance reform impacts you as an agent, no matter what type of product you're currently selling. What's going on with reform right now? What's happening in the reform picture? Health reform is coming. And no matter what, no matter whether we like it or not, a lot of big changes are coming down the pipeline when it comes to health insurance. We don't know exactly what's going to happen. We don't know all the ways in which things are going to change, but we do know that some changes have already occurred. We know that more change is coming. Most importantly, we know that it's going to impact our careers as agents in a pretty dramatic way if we rely on health insurance right now. We've already seen it start to happen. Commissions are going to be dropping next year for health insurance agents. We've already seen some types of plans start to be limited and eliminated. I know down here it's getting more and more difficult to find solid maternity plans for individuals, and it's very, very difficult to find good child only plans anymore. And what we're seeing across the board is just generally health insurance as a primary form as a primary product to sell is becoming less and less attractive to us as agents. So, what we want to talk about here today is how we can move into something new, how we can kind of shore up our careers and find a new outlet for ourselves. Health agents, like we said, with reform coming and with it having arrived in the way it already has, we're going to start seeing more and more limited sales opportunities. With exchanges coming into place, with limited product offerings, higher premiums, lower commissions, and so much uncertainty in the market, health insurance is going to become a tough way to make a living, and it's only going to get harder. I say this with some almost sadness. I started off as a health insurance agent. That used to be all I did was health, and it pains me to see that the way I got launched in my career is becoming less and less viable today. But I am very thankful that I was able to move into life insurance when I did, and that I was able to learn the industry, and now I have something to fall back on. So, with that uncertainty ahead, I know a lot of people are going to be taking the same kind of path I did, and that's why we want to take this time today to talk about how to move into something more effective, how to move into something a little more stable. Health insurance isn't the only thing that's impacted by our current political and economic climate. What we're seeing here as well is a lot of changes with Medicare. Supplements, we've added a couple of new plans this year. With Medicare Advantage, we're having increased oversight from the government. We're having changes to our enrollment periods. And the future of MA is not as certain as we'd like. Many advisors are thinking, maybe we got 2, 3 more years in MA before we need to start looking elsewhere. Right now, October 2010, we're gearing up for this year's enrollment period. It's new and shorter than it usually is, and we're not sure what it's going to be in coming years. So there's a lot of uncertainty with Medicare as well, and with the increased oversight and with the new plans coming in, we're seeing some interesting things happening there. It's not as stable as it once was. A lot of agents made a living selling long-term care, especially as an ancillary product. But here recently, with the boomer generation starting to hit the age at which they're going to start utilizing long-term care insurance, we're seeing two things start to pop out: increased utilization and decreased lapse rates. What this means are more people are using their long-term care policies. Give me 1 second, guys. I'm going to turn the microphone up a little. There you go. More people are using their long-term care policies. Fewer people are letting them lapse. Now, what that means is that the insurance carriers are having a tough time, actuarially speaking, adjusting their premiums to where they should be. This means that rates are starting to increase in order to offset the increased utilization and decreased lapse. Pretty notably, we've seen here recently John Hancock, and I've mentioned this several times recently, seen John Hancock increase their premiums on their existing book of business, 80% of their clients, by 40%. 40% rate hike is a huge, huge deal. Very, very big number, very, very important for your clients. Kind of underlies the fact that the long-term care arena is not as stable as we would think. It's also one of the first times we've seen rates increased on existing block of business for both individual and group policies. That in and of itself is a huge concern. And lastly, with annuities, what we're seeing right now are fixed annuities and MIGAs are having historically low interest rates, and we're having a semi-volatile market right now. It's a little up, it's a little down. Those low interest rates make annuitization right now less attractive than it might be, and it makes our MIGAs a little bit tougher to sell, our multi-year guarantee annuities and our fixed annuities. That semi-volatile market, however, does make indexed annuities a little bit more attractive because, as we know, indexed annuities really take advantage of a volatile market. So when you put it all together, health insurance, annuities, long-term care, Medicare, what have you got? We've got increasing premiums and less certainty about what's going to be happening in the future. Uncertainty and monetary losses. That's a tough thing. It's a tough pill for your clients to swallow. It's tough for you as well because we're seeing exactly the same thing from the agent's perspective. We don't know where our careers are going to be in health insurance and long-term care down the line. And we know that come next year, if we rely on health insurance for the majority of our business, we're going to start losing money because those commissions are going to be decreasing. So what do? We put it all together, and it's time to start looking at relying on more historically strong products. Life insurance, different annuity products, and one of the newer products that's going to prove to be very, very useful to us right now are qualified long-term care insurance annuities. First up is life insurance. If you've sold health insurance in the past, there's no excuse for you not to have sold life insurance in the past. Like I said, when I first started in my career, I was a health-only agent. That's all I did. That's all I wanted to do. And I did fairly well with it. But when I learned how to cross-sell life insurance, that's when my career truly took off. That's when things really started getting very good for me. Life insurance must be, a part of any successful health insurance agent's portfolio, which means you should already know how life insurance works and how to sell, and it should already be something you're comfortable presenting to your clients. And if you're not, don't worry, our next webinar this week is going to be over the art of cross-selling, which will help you out with that. Now is a great time to begin focusing more on making life insurance your primary product instead of a cross-sell product, because life insurance has some of the strongest guarantees available to you. With term life insurance, if you pay your premiums, you get your coverage, and that's that. They're not going to pull the rug out from under you. There's not going to be a government mandate life insurance program. There's not going to be a life insurance exchange. It just is what it is, and you've got what you've got. Universal Life doesn't have the same strong guarantees, but does have the ability to accumulate cash value very quickly. And if you want both worlds, pay a little bit more, get a whole life insurance policy. The absolute strongest guarantees available to any insurance product in the market, as well as the ability to accumulate some significant cash value. If you've kept up with Wall Street Journal lately, you'll notice that life insurance purchase rates are down for our middle to lower income individuals, but significantly up for high net worth individuals. And why is that? It's because our high net worth individuals have recognized the volatility in the market and recognized that the potential for loss is significant. So what they're doing is they're working with a product that provides the strongest guarantees possible and allows them to put their wealth where it works most effectively for them in such a volatile and down market. Life insurance. So basically what I'm saying is the people that know what they're doing with their money are putting it into life insurance right now. And that's a very strong angle you can take with your clients. Strong guarantees cash value accumulation and wealth transfer, sending wealth from generation to generation, and even wealth creation from generation to generation. Life insurance is a very, very stable product. It's a quick and easy sell too, and can be the thing I really like about life insurance is that it can be as simple or as complicated as you'd like to make it. You can make life insurance the absolute simplest thing in the world. Just sell some final expense, maybe some mortgage protection term insurance. Nothing to it. Or you can get really complicated and get up there with tax planning and estate planning, business insurance, all kinds of different things you can do. Life insurance grows with you, and it makes the career that you want. So life insurance is a great fallback right now for our agents who are currently relying on a lot of health insurance products in this reform market. It's also worth taking a look at annuities right now. Our interest rates right now are fairly low, which makes our fixed annuities and our multi-year guarantee annuities a little bit less attractive than usual. Interest rates on them just aren't that high. That means the accumulation potential is diminished a little bit. But what we're seeing now are income annuities and index annuities really stealing the show. Remember, our market is a little bit up and down right now. it's not a consistent growth, not a consistent decline. There's a little bit of volatility going on right now. Makes index annuities exceptionally attractive. Remember, with an index annuity, you're protected against losses. When the associated index goes up, interest is credited to the annuity based on the performance of that index. When it goes down, there's a 0% floor. You don't lose money. Now, of course, it's a vast oversimplification. If you're looking at a point-to-point structure, the index can increase and decrease over the course of the year, and only 2 points matter. If you're looking at an averaging method, like I said, it's a little bit oversimplified. Take a look at our webinar on indexing and crediting methods so that you can understand a little bit more about how index annuities truly work. What you'll see there is that index annuities really provide your client with a good potential for growth and a great protection from downside losses in a volatile market. Income annuities are also very powerful right now. What we're seeing is a lot of income annuities offering 5, 6, even up to 8% roll-ups on their income side. Basically what that means is you've got an underlying annuity that's performing based on the performance of an associated index, and the income side of the annuity is growing based on that flat percentage rate. Now that's fantastic because what that's doing is making sure that your client, so long as they're wanting to take income from it down the line, is getting a great growth percentage over several years. Now again, we're oversimplifying a little bit here, and that's because we don't want to go all the way into it, because we've got a dedicated webinar on how income annuities work already in the member webinar section. So if you'd like to learn more about indexing and crediting methods, check out the indexing and crediting webinar. If you want to learn more specifically about how income annuities work, take a look at our How Income Annuities Work webinar. The point is, annuities right now can provide you with a very safe and secure place to park your money and grow your money for retirement, even in this type of economy. Qualified long-term care insurance annuities are a very new type of product, and again, we've got an entire webinar dedicated specifically to discussing how these products work. They're not replacing traditional long-term care across the board, but they are a potential replacement for many clients, acting as a powerful tax deferral vehicle and killing two birds with one stone. Basically what we're seeing here are annuities, qualified annuities. We're taking qualified funds, putting them into an annuity, and having part of the annuity roll-up go towards paying for a long-term care insurance rider. What we're seeing then is a lot of tax-free benefit. We're seeing a huge tax shelter in the form of tax-deferred growth in the annuity itself. We're putting qualified money toward that long-term care rider, which means our tax-deferred money is going into that, and we're not having to pay taxes on it. We're seeing the inclusion of a significant amount of long-term care protection, and we're avoiding some of the major problems with traditional long-term care. We're avoiding the high cost by using pre-tax dollars to pay for it inside an annuity. We're avoiding the use it or lose it style of most long-term care insurance policies. If you don't use the LTC, you just lose it. With this, if you don't use the LTC, that's fine. You still have an underlying annuity that's accumulated a lot of money. And we're protecting ourselves against things like we've seen recently, massive rate hikes on existing books of business. Qualified long-term care annuities are kind of the wave of the future when it comes to this. If we're looking at our long-term care market, it's really going to be qualified long-term care insurance annuities and linked benefit plans coming down the pipeline. And we're going to be talking more about linked benefit plans in a future webinar, but they're very interesting products that can fill this niche as well. The point is, our market right now has significant uncertainty, and unfortunately, the things we do know for certain tend to be the more negative things. We know that policy types are going to become more and more limited. We know that we're going to have increased government intervention and oversight in our health insurance careers. We know that our commissions for health insurance are going to be dropping. Not a lot of sunshine on the horizon for a health insurance career right now, which means it's important, vitally important for us as agents right now to rely more on stable products. These annuity products and life insurance products that have been around and will continue to be around. They're not going anywhere. Shore up your career with these products. If you're relying solely on health insurance right now, it's a great thing that you're a member of this association, because you're starting to give yourself something to fall back on, and something not only to build a safety net with, but build an even more lucrative career with. It's very important, always, 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 to never have all your eggs in one basket. Agents that had all their eggs in the long-term care basket and they saw these huge rate hikes coming across the board, they're in trouble. Agents that have all their eggs in the health insurance basket, now they're in trouble. Agents that sold only universal life back in the late 80s, early 90s, and then saw all their policies starting to implode now, they're in trouble. But diversify, use annuities, qualified long-term care annuities, some different types of life insurance. You'll find that you'll shore up your career, become a more successful agent, become a more well-rounded and trusted advisor, and all in all, have a much better career. So that's going to wrap us up for Health Reform and You, presented by the Independent Life Insurance Agent Association. Now we want to go and open things up for questions. So if you guys have any questions, come on down to the right-hand side of your screen in that question and answer chat pane and type them out for us there.